Hi, it's Victor here from Trend Foreign Trading for Beginners. In today's episode, I will discuss how you can increase your trading profit by deploying proper investment selection and show you how to do it using a sample trading portfolio. Coming up next. Most of you, when you first started trading, you probably just look at shares or indexes or forex, and you don't really look at anything else for the starters. But I think from a trend following point of view, I think you need to look at other markets all at once. Basically, what happens is we all know there's saying in stock market that there's always a bull market somewhere and there's always a bear market somewhere. And we only, for example, just look at forex. I know there's many forex pairs and stuff, but you then basically ignore, for example, indexes or crude oil or cryptocurrency. So as part of trading strategy, for trend following anyway, we look at a number of different markets to basically both to reduce risk as well as to increase profits. What happens that is if you look at, let's say, for example, I look at 6 different markets, basically shares, forex, metals, oil, indices, and cryptocurrencies. And basically, some of these markets could be very dull at a particular time, but other markets could be quite jubilant and moving up and down, quite volatile. And if you only just look at, for example, like I said, forex, and you basically ignore the other 5 markets I just mentioned, you basically miss out all the ups and downs. Trading, trending, situations that you basically not being taken into account. So what happens then is you could make less money from other markets. But at the same time, if you, let's say you're losing money in forex, and oil is trending, and you have been tracking and investing and trading in oil, and basically the money you make from oil cover your losses in your forex. So overall, you reduce your trading risk as well as give you a chance for a better return. And this is how I actually does it myself. For when I first started, I don't even look at it at all. I just look at shares. I start off shares using moving average, crossover systems. Basically, I just look at that, and I use it for basically in my ISA. Basically, as an investment vehicle that's tax-free in UK, and I then slowly use that for my pension as well. Called SIP, basically a self-invest pension plan. And I make some money out of there. Has been quite successful for me, and but then obviously I moved to other things, spread betting as well. But always I remember and over basically time and test and trial, find out that how I should properly build my portfolio, and I've been using it for my pension fund as well as spread betting myself. So here is examples that something that I make up earlier, and this is the list of things I think you guys should, if you want to spread your risk as well as increase your trading performance, look at this 15 shares. This is just my little portfolio, and basically just to show you what I mean by spreading to different markets. So first of all, we have some shares like. Basically on shares I have certain criteria. It must be big cap, well capitalized and properly well known, so if the share price move, it won't be so volatile, like moving up 10, 15, 20% or something kind of thing, and just like quite smooth trading curve. So for example, I on this sample portfolio, I look at Apple and Amazon. There's reason behind it. On Apple, because I mean I've been Hong Kong Chinese, I keep track of what trading war between U.S. and China. And one thing I think most people know about already, Apple's iPhone has been quite expensive, and for people to buy, talking about £1,000 here in UK, and in Europe, is just as expensive, and so is in Asia. And slowly, people are just finding it. It's getting too much to actually use it. Obviously, they have a lot more competition in Asia, and the trading war is not helping. And there's a lot of talks in Hong Kong already saying, people not actually using Apple as much. But recently, the share has been gone up a lot because of the possible delay of tax by Donald Trump, President Trump. Therefore, for like last Friday, it gone up quite a bit. But overall, I think it's a good play here, because I think on the whole, every market is slowing down, and iPhone is no difference. It's going to get hit. So I think this will be useful for you to keep track of it. Amazon. Funny, this one of the things I've been tracking for quite some time as well. It has been giving out sell signal for the last week or two. Basically, has been gone below the 50-day and 200 days moving average. And for me anyway, I think this is a good sell. Basically, I'm basically selling on myself, and I'm shorting it. Simply because it's below my 50-day and 200 days moving average. And it basically is, I mean, this is a retail, bookseller, and then they sell almost anything. And because of the trade war, again, I think people buying and selling things might not be as good as before. So I think that will be useful to keep track of. The next thing is basically a few forex. Aussie dollar against the US dollar, and on this one, because it's linked to commodities, well, the gold and silver thing. So I think if the market tank, which I think it might, this will go up as well as with the gold. Also, I think one thing, not sure if you keep track of as well, the US dollar index has been around 98 and gone up to 99, come back down again. Has come down a little bit, I think 97 on Friday, because the temporary delay of the postponement of the tax increase of from US on Chinese imports. I think that one on its own, I think it's American US dollars has been going up and up and up for quite some time, since about last year in around 80, and gone up to recently to 99. I think is knee topping. I mean, historically the highest has gone up to like 100, 102, 103, and I think there is also a chance to further come down. So this is why I look into it. Part of the reason why I look into it. Also on the flip side, because of the trade war, I also look at the USD versus the Chinese yuan. The Chinese yuan, here is seems to be inverse. So when the dollar is weaker, basically the Chinese yuan go up, and when the Chinese US dollar is in strength, moving up, the yuan is going down. So it's sort of like inverse, and it's been trading that. I've been trading that for the last year or so, and it's been quite profitable. And the other one for forex is US against Japanese yen. Is one of the biggie. So it's quite good for tracking it. The other thing I look at obviously is oil. And basically I look at both Brent crude oil and then the US crude. I think it's, you guys in America call it WTI. I mean, West Texas Instrument or something. Basically I keep track of those. For me, the reason I think it's useful to track this is trade war, basically, and also the slowdown of economy around the world. So the actual need for crude oil, whatever version you're tracking, it's been showing slow down quite a lot. Recently, of course, there is some explosion in Saudi Arabia, and on Friday also some Iranian tanker got hit for some reason, and there was a bit of spike on oil prices. But on both occasions, it's gone up a little bit and come straight back down. Basically, the underlying, for me anyway, it feels like the fundamentals comes in, and it's not making new highs kind of thing. So there's a good chance for it still going down, and I've been tracking that as well. And then last but not least is obviously two more things. Gold. I've been looking at gold and silver. I think that'll be good at, but I think I'm more interested in gold. So I think gold is definitely something to look at. And then the next bit obviously is this index. So for me, I'm more like an index junkie, and that's correlation here. So I would basically say, select the one that you really like. If you're from US, you can just go and track your Dow Jones or Nasdaq. If you're in Europe, you can track FTSE or DAX. And if you're in Asia, you can track Hang Seng Index, Nikkei. And for me, I'm more into index. So basically indices. So I've been tracking all of those I mentioned just now. But that could cause a bit of problem, because we have, like I just mentioned, about 6 different indexes, and they all basically highly correlated. And one of the reasons I said, select 1 or 2 from here is that if you have too many of very correlated, closely correlated markets, then when, let's say, the index is tanked, it sort of all move in tandem together, and you're not basically spreading the risk. The whole idea I show you, just to mention about this type of portfolios, to show you that different markets can go obviously in different ways, and you basically spread the risk around by tracking other markets, and hopefully you can also make money out of those markets. So both to reduce risk as well as to improve your profitability of your trading account. And basically, for a start a new trend follower, you should have maybe 10. I think that should be maximum enough. Maybe you can go down even further if you really want to, just for a trial. Use 5. Select any of this or any of that you really want to. But for me, mini is it must be highly liquid. So and also just to make sure that there's not as much volatility. But if you go in crude oil, recently you've seen it, a little bit of explosion, and then suddenly the crude oil went up 10% or something. It's something that I just can't tell. But that's facts of life. But if you track it long enough, you probably make money out of it anyway. So I'm not very worried too much about it. So this are just my sample, and what I think could be useful is for new traders as well. Is basically, if I'm just going to select 10 from here, and I'm going for every Sunday. As what I do normally on Sunday is I review my trade and review the market and basically all the charts, and just to continue next day or the next week how I approach things. Obviously, I follow my trend following system, but also look at news and look at the fundamentals as well. But always trend following system first. But my whole belief is trend following is my bread and butter. But to be more effective, I personally, just my honest opinion, be more effective if I also have some fundamentals understanding as well. However, I'm here to trade the market, and the market basically driven by emotion, and so my always consensus, my concentration will be on the trend following system. But knowing a bit about the market overall will help as well. I think help my understanding. But my concentration always on the maths, or on the methods, or on the process, and not about the fundamentals really much, but just for my own use. So these are basically a little sample portfolio I think you might able to use. And what I do, like I said earlier, for new trend followers, would be useful to have regular updates on those shares and markets. So I would select 10, and every Sunday I will look into it and then just give you a little rundown, so to speak, using my system. Like I said, some of my episodes already before, I use 2-time ATR as a short-term trading system. Medium-term trading system, I use Turtle System 2, which is a system which is a 55 days breakout system. And the third one is basically what I've been using all along. Is the 200 days, 50 days moving average crossover system. Just basically my way of looking into it, and rather than the standard one that's been thrown around on the market. And basically, I would basically look into it and keep track of those and give you my update on and how I see it, what have happened, so to speak, on the market, and also how my trading signals actually says what I need to do and so forth. I think that would be useful for people to see how trend following works, and also most likely I probably go through what my some of the emotional thinking behind it, doing things and showcase you some of the problems and issues that I actually see sometimes when I'm actually trading, and the personal, emotional ups and downs, and how I handle it, and also my losses as well as winnings, and basically use that as a guidelines for any new traders to see how trend following works. As always, a lot of saying out there, trend following is dead, especially in a range bound market or side market. Any systems, just like trend following as well, has its good time and bad time, and there is a fallacy, as far as I'm concerned, that there's some sort of holy grail out there, a system to always work no matter what type of situation. To me, this is totally wrong thinking, and one of the reason I want to showcase you the trades I sort of track and so forth is basically to show you it's a long-term game. It's not a trading. It's a long-term game. It's not 1 year or 1 month. It's more like, for me, it's for the rest of my life, 20, 30 decades talking about. And out of those times, you will have some good trades, some bad trades. Most likely, when you first start trading, you blow up a couple of accounts. But one thing that if you're really into trading, you will never give up. You go back in again, you rebuild your account, try it again. But at the same time, before you start, you look at where you have gone wrong, learn from your mistakes, and while you're trading, you keep track of your trade, and always have the back of your mind that what mistake you've done before, and not try to repeat them. And then when the trade is closed, you look at the trade, how you gone in, how you get out, what were you thinking when you get in, what you thinking you get out, what happened when you're trading in between the trade is in progress, how you feel, that kind of stuff, which I talk a bit about already in that episode. I think those are the type of things that people should put more to keep track of. So my updates, basically I try to put all together so that it gives you a bit of feeling of how trend following is supposed to work. But to be warned, this is a warning. Basically, it's not like quick reach very quickly scheme, that kind of stuff. It's gonna take some time, and I'm just basically show you how it is. Sometimes it could be boring. Other times it could be very exciting. At times it could be like a roller coaster ride. Other times like watching paint dry, like a snail walking across the path or something. So we'll see how it goes, and hopefully you will find it useful and kind of things. And this whole idea about this podcast basically show you things, how trend following works. So that this is what I wish that I had when I first started, but I just want to spread the word and say, okay, at least some breadcrumbs around so people can follow, and hopefully they find it useful. And basically this is the end of this episode. If you like my episode, please please subscribe to my episodes and listen to other podcasts that I have as well. So, and I will speak to you soon. Bye for now. Ciao.